What if China and Japan dump $2 trillion in U.S. debt? World economy collapses. Imagine this. China and Japan, the two largest foreign holders of U.S. Treasuries, suddenly decide to dump their combined $2 trillion in American debt overnight. Japan's sitting on $1.2 trillion. China holds $760 billion. Together, a $2 trillion nuclear bomb aimed straight at the heart of global finance. What happens next isn't gradual, it's catastrophic. Bond prices plummet, yields spike 3 to 5% overnight. The U.S. government suddenly owes $1 trillion plus in interest payments annually just to keep operating. Stocks? S&P 500 crashes 25% in 48 hours. Retirement accounts evaporate. Consumer panic sets in. Banks? They're holding trillions in treasuries as collateral. When those assets lose 30% value, balance sheets implode. Remember 2008? This would be worse because this time it's the safest asset in the world that failed. The dollar? Violent devaluation. Inflation explodes to 15% plus as imports become unaffordable, and it all unfolds in 72 hours. China and Japan just pulled the trigger, but can they even do it? Or does the system destroy them first? Stay with me, because the next 10 minutes will show you exactly how this plays out. Let's look at the real numbers. As of February 2026, Japan holds $1.2 trillion in U.S. Treasuries. That's more than any other country. China holds $760 billion. Together, they control nearly $2 trillion of American debt. The total U.S. national debt? $38 trillion. Foreign governments own about 25% of it. That's $9.5 trillion total foreign holdings. But Japan and China alone, they have enough firepower to destabilize everything. And here's the first warning sign. The February 2026 Treasury auction. It flopped. Bids came in 20% below expectations. Yields had to spike higher just to attract buyers. Investors are nervous. Foreign central banks are rethinking their positions. Japan needs cash to defend the yen. It's been plummeting. China wants to diversify away from the dollar. Both have motives. Both have the means. And recent data shows they're already selling. Japan dumped $45 billion last quarter. China cut $22 billion. These are stress tests for the coming storm. If they accelerate, the dominoes start falling. But why would they pull the trigger now? That's what happens next. So why would they actually dump? Japan has a currency crisis. The yen has lost 30% against the dollar in 2 years. It's at 160 yen per dollar now. The Bank of Japan needs USD cash immediately to intervene and prop up their currency. Selling U.S. Treasuries is the fastest way. They get dollars instantly, no questions asked. Japan sold $45 billion last quarter alone, and they're just getting started. China has different motives. Trade War 2.0 with Trump tariffs at 60%. Beijing sees U.S. debt as a vulnerability. They're pushing BRICS de-dollarization hard. Gold buying tripled last year. Russia and India are on board. China cut holdings by $22 billion recently, part of a long-term diversification strategy. But the real question, What if this isn't separate? What if it's coordinated? Geopolitical tensions are peaking. Taiwan Strait incidents weekly. South China Sea militarized. Japan realigning with U.S. defense. A simultaneous dump would be financial warfare, not just economic necessity. Both countries have the means, both have the motives, and the world is watching nervously. When the triggers align, the bond market feels it first. That's scenario 1 coming up. Wave 1 hits the bond market. Hard. $2 trillion dumped simultaneously. Treasury prices collapse. Yields spike 2 to 4% overnight. From 4% to 7 to 8% in 24 hours. The U.S. government faces disaster. Annual interest payments jump from $800 billion to over $1.5 trillion just to service the debt. That's 25% of the federal budget, gone to interest alone. No money left for defense, Social Security, or infrastructure. Global finance starts shaking. Treasuries were the safe asset, the risk-free benchmark. Every mortgage rate, corporate bond, car loan, credit card APR, all tied to Treasury yields. When those explode, borrowing costs everywhere skyrocket. Companies freeze hiring, consumers stop spending. The world's safest asset just became the most dangerous. Confidence evaporates. Panic spreads. But this is just wave 1. Wave 2 hits stocks next, and it's much worse. Wave 2. Stock market annihilation. S&P 500 drops 30% in 1 week, from 5,200 to 3,500. Nasdaq loses 40%. Trillions in wealth evaporate. Retirement accounts cut in half. Companies slash dividends. Layoffs begin immediately. Consumer confidence collapses. Wave 3. Banking system under siege. Banks hold $5 trillion in treasuries as collateral for loans. When treasury prices fall 30%, bank assets lose massive value. Balance sheets turn red. Lending freezes worldwide. Credit markets seize up, like 2008, but faster. Wave 4. Dollar hegemony crumbles. Demand for USD plummets. Dollar index drops 25%. Imports cost 30% more. U.S. inflation spikes to 15%. Gas at $7 per gallon. Grocery prices double. The Fed loses control completely. Every safety net fails. All dominoes falling together. Global recession becomes depression. But there's one final safeguard. The nuclear option coming up. But countries don't dump blindly. There's mutually assured financial destruction. MAD for short. If China and Japan dump $2 trillion, treasury prices collapse first. They take massive losses immediately. Billions evaporate from their reserves. The more they sell, the lower the price goes. It's a financial death spiral for the sellers. Japan loses 30% on their holdings. China loses hundreds of billions. Their currencies would crash harder. Central bank credibility destroyed. Everyone knows this. That's the first deterrent. But America has a nuclear option. IEEPA, International Emergency Economic Powers Act. President Trump can freeze foreign assets instantly. Chinese and Japanese treasuries, locked in place, cannot be sold, cannot be transferred, cannot be liquidated. Bank accounts frozen too. It's financial checkmate. No one fires first because everyone loses everything. The system holds by mutual vulnerability. But cracks are forming. This isn't speculation. It's economic reality. $2 trillion in U.S. Treasuries, controlled by Japan and China. One coordinated move away from global financial collapse. The numbers are real. The mechanisms exist. The tensions are rising. Mutually assured destruction holds it together, for now. But cracks are forming. Auctions are failing. Currencies are crashing. Geopolitics heating up. Who blinks first? Japan needing yen defense cash, or China pushing de-dollarization? You decide. Comment below. Who pulls the trigger first? Japan or China? This scenario keeps economists awake at night. It should keep you awake too. Because when $2 trillion moves, the world changes. Like if this opened your eyes. Subscribe for more financial what-ifs. Share with someone who needs to see this. The next crisis countdown has already begun. Thanks for watching. Stay vigilant.